The global manufacturing landscape is in constant flux, shaped by economic forces, geopolitical shifts, and technological advancements. For decades, China has reigned supreme as the world's factory, its industrial might supplying goods to every corner of the globe. But the ground is shifting. China's manufacturing dominance is being challenged by rising costs, environmental concerns, and trade tensions. Simultaneously, new contenders are emerging, eager to claim their share of the global manufacturing pie. India, with its vast and youthful workforce, and the dynamic economies of Southeast Asia, are positioning themselves as viable alternatives. This shift in global manufacturing is not merely about changing production locations, it reflects a deeper transformation in the global economic order. The old order, characterized by a single dominant manufacturing hub, is giving way to a more multipolar system, one where production is more geographically dispersed. This diversification of manufacturing promises to reshape global trade patterns, supply chains, and geopolitical alliances in the years to come. The question on everyone's mind is, can India and Southeast Asia truly replace China as the world's factory? The answer, as with most complex global phenomena, is not a simple yes or no. It is a nuanced evolution driven by a confluence of factors, each with its own set of opportunities and challenges. To understand this complex interplay, we must first delve into the factors that propelled China to its position of dominance, the cracks that are beginning to show in its once impregnable manufacturing edifice, and the potential and pitfalls that await India and Southeast Asia on their respective paths to becoming manufacturing powerhouses. The journey to becoming the world's factory is arduous, fraught with challenges and uncertainties. China's ascent to becoming the world's factory is a remarkable tale of economic transformation. It was a journey fueled by a potent combination of factors, each playing a crucial role in propelling China to the forefront of global manufacturing. The sheer size of China's labor force, readily available at competitive wages, was a magnet for foreign investment. Western companies, enticed by the promise of low-cost production, flocked to China, setting up factories and outsourcing their manufacturing operations. This influx of investment, coupled with China's aggressive export-oriented policies, ignited an economic engine that transformed the nation. China's government played a pivotal role in this economic miracle. It implemented policies designed to attract foreign investment, promote exports, and foster domestic manufacturing. Special economic zones were established, offering tax breaks and other incentives to lure foreign companies. Infrastructure was rapidly developed, with new ports, roads, and airports being built at a breathtaking pace to facilitate the flow of goods and materials. This strategic combination of abundant labor, government support, and a relentless focus on export-led growth propelled China to the forefront of the global manufacturing stage. China's dominance in manufacturing reshaped global trade patterns and cemented its position as an indispensable link in global supply chains. The world grew accustomed to relying on China for everything from smartphones and laptops to clothing and toys. China's economic miracle became a testament to the transformative power of globalization and a harbinger of the shifting balance of economic power in the 21st century. Despite its enduring dominance, cracks are beginning to appear in China's manufacturing armor. The very factors that propelled its rise are now presenting significant challenges. Wages in China, once irresistibly low, have been steadily increasing, eroding the cost advantage that once drew companies to its shores. The Chinese workforce, once seemingly limitless, is shrinking as the country grapples with a demographic shift brought on by an aging population and a declining birth rate. This shrinking pool of workers is further contributing to rising labor costs, making China a less attractive destination for cost-sensitive manufacturing. Environmental regulations, once lax, are being tightened as China confronts the environmental consequences of its breakneck industrialization. Air and water pollution have become major concerns, forcing the government to impose stricter environmental standards and compelling companies to invest in cleaner technologies, adding to their operating costs. This environmental awakening, while laudable, is further chipping away at China's cost competitiveness. Moreover, geopolitical tensions, particularly with the United States, have cast a shadow over China's manufacturing dominance. Trade wars and tariffs have disrupted global supply chains, creating uncertainty for businesses operating in China. The ongoing trade dispute between the US and China, while showing signs of easing, has highlighted the vulnerabilities of relying too heavily on a single source for manufacturing. These challenges, taken together, are prompting companies to rethink their reliance on China and explore alternative manufacturing destinations. Amidst the shifting tides of global manufacturing, India is emerging as a contender with enormous potential. With its vast and youthful population, India possesses a demographic advantage that China can only envy. Its workforce, teeming with young, eager workers, is a potential goldmine for labor-intensive industries. The Indian government, recognizing this potential, has launched ambitious initiatives like Make in India, aimed at transforming the nation into a global manufacturing hub. These initiatives offer a range of incentives to attract foreign investment, promote domestic manufacturing, and enhance India's competitiveness in the global marketplace. India's potential extends beyond its demographic dividend. The nation boasts a burgeoning middle class with increasing purchasing power, creating a vast and expanding domestic market for manufactured goods. Furthermore, India has a long and storied history in industries like textiles, pharmaceuticals, and automobiles, providing a solid foundation upon which to build a more diversified and sophisticated manufacturing sector. The government's push towards infrastructure development, with massive investments in roads, railways, and ports, aims to address one of the key bottlenecks hindering India's manufacturing ambitions. India's rise as a manufacturing powerhouse is not merely a matter of economic opportunity. It carries profound geopolitical implications. A strong and vibrant manufacturing sector would not only boost India's economic clout, but also enhance its strategic autonomy on the world stage. As India sheds its image as a predominantly services-driven economy and embraces its manufacturing potential, it is poised to become a force to be reckoned with in the global manufacturing landscape. Section 5. The challenges on India's path to manufacturing supremacy. Despite its vast potential, India's journey to becoming a global manufacturing powerhouse is not without its hurdles. While the Make in India initiative has garnered significant attention and investment, several challenges remain. Infrastructure bottlenecks, a perennial problem in India, continue to plague the manufacturing sector. Inadequate road and rail networks, congested ports, and unreliable power supply all add to the cost and complexity of doing business in India. These infrastructural deficiencies make it difficult for companies to transport raw materials, finished goods, and workers efficiently, undermining India's competitiveness. Another significant obstacle is India's infamous bureaucracy. Navigating the labyrinthine corridors of Indian bureaucracy can be a daunting task, riddled with red tape, permits, and approvals. This bureaucratic quagmire can deter investors, delay projects, and stifle innovation. The government's efforts to streamline regulations and improve the ease of doing business have yielded some progress, but much more needs to be done to create a truly investor-friendly environment. Furthermore, India faces a significant skills gap. While India boasts a vast workforce, a large segment lacks the technical skills and training required for high-value manufacturing. Addressing this skills gap through education, vocational training, and skill development programs is crucial for India to move up the value chain and compete in advanced manufacturing sectors. The government has launched several initiatives to promote skill development, but scaling these programs to meet the demands of a rapidly evolving manufacturing landscape remains a challenge. Across the globe, new manufacturing hubs are emerging, creating a constellation of stars on the rise. From advanced robotics in South Korea to innovative textiles in Vietnam, these regions are redefining the landscape of global production. As we step into a new era, global supply chains are undergoing a profound transformation. With advancements in technology and shifts in geopolitical dynamics, businesses are rethinking their strategies to build more resilient and flexible supply networks. Technology continues to be the catalyst driving transformation in manufacturing. From artificial intelligence to the Internet of Things, these innovations are not just enhancing efficiency, but also paving the way for smarter, more sustainable production methods. Looking ahead, the future of global manufacturing holds immense promise. With a focus on sustainability, innovation, and resilience, the industry is poised to navigate the challenges and seize the opportunities that lie ahead.